Good morning, traders. This is Barry Wilkie with StartupTrading.com. It is 2 minutes till 9 a.m. Eastern Time on Tuesday, November 11th. Today is Veterans Day. So, thank you to everyone who has served out there um, and is serving now. Looking at yesterday's action, right? Overnight action was that jumpy, poor structure up because of the trade deal yesterday. And then you can see in the overnight or once the bell session, so the blue is the overnight, the shaded gray is the distribution between the bells yesterday. You can see it continued that spiky, jumpy action. So this is what in profile theory we consider poor structure. So each one of these high volume nodes is a place that you could come back to and revisit, and it should be jumpy to those as well today. Looking at the keep me out of trouble fibs here. Um, once we come into lunchtime, right, it was just kind of up in the morning, down into lunch, and then just, uh, no offers after that, just a straight bid. And we come down into the session halfway back long and just come back up and completed those targets into the end of the day. So those aren't the big fibs Jack looks at. Those are just the, the little ones, right? Just for this session. So if you look at the patterns and these lower middle two here are just tick charts with a VWAP with the +1, +2, and -1 and -2 standard deviations on them. You can see that in the late afternoon, right, you got into what I consider the Superman up pattern, right? You're just staying between the +1 and the +2 standard deviations, and even exceeding +2 a little bit on the ES yesterday. That's kind of Superman up. So, um, in the overnight action, however, uh, the pattern has been quite the opposite. So we've come back down, right? Once the session opened, we've been staying pretty much uh, all night down, and this is the title of my video, overnight trading down into large gamma for key trading distribution or key trading levels. Uh, so you've got a -1 and a -2 here. You can see that we pretty much trended all the way down into that until we hit uh, this thick yellow line, which is right around 25,582 half. And what that is, if we come over here, uh, we'll get into the gamma uh, right here. But that is going. Sorry, I have some new puppies in the house, and they're just having a blast playing with each other. They're sisters. So as we come into it, this line represents 520 on the Qs, and we'll get into positioning right now. So let's look at the Qs first. Um, you can see that for today's expiration, the expiration that expires on November 11th, right? You can see that 520 to 522 has a lot of puts on it, right? And then you have a little bit of a low volume node, as we would say in profile theory, a little bit less activity on 618, 619, and then you pick back up a little bit from 617 to 615. So this is potentially a floor, and I like to look at where there's a decent amount of overlap between the number or the volume of the open interest on the puts compared to the open interest on the calls for the day. You can see that 620 to 623 is really that section that has the most volume overlap for today around where we're trading. The Qs are currently trading 620 half right now. So they've come down here in the overnight. We've kind of, hit the 620 and bounced off of it. So below there, I would think that, you could get another, each one of these dollars on the Qs represents around 40 to 41 and a half points on the NQ to trade. And this is really what moves the NQ. It's the position. This is where all the money is in the stock market. It's on the options, right? And then the dealers and the people taking positions on the options. That's what moves the market around from day to day. There's nothing going on other than people making bets that's really changing that information that much a day, right? There's not that many catalysts. It's the money moving around in the options market that's moving in the stock market. So as we, kind of handicap what's going on with the options market, we can kind of handicap what where we think we have good risk to reward for the stock market and the futures trading. And looking at 623, 624, that is going to be your upside of agreement. And then we'll see if we can get into. You can see for the calls, right? You can get in there. So, in my opinion, you need to have help from outside catalyst or the VIX to get and hold above 624, and you need outside catalyst to hold below 620. So we'll see if we get those today. I'm not going to beat up the rest of the positioning for them. I'll have it marked on my charts as we go through. But you can see that on the ES, we're right here trading this 680 as well. We've come down from 682 and a half basically to just a little bit over 679, 679.30, 679.25, right around there. But we're currently, floating around this 680, which is a large gamma for the SPY, which moves the ES and the S&P 500. Each one of the dollar strikes on here is 10 points in the S&P 5 or the ES futures and also the S&P 500. So we'll go from there today. But key levels to watch, right, are going to be those levels I pointed out on the positioning, and we'll see if we get there. So you could potentially go down maybe another 80 handles on the Nasdaq, uh, and then up maybe 160. That's going to be the meat of the trading, but this large gamma is probably going to be a little bit of a split here at the opening bell. So watch these 620 and the Qs, and watch the 680 and the SPY, right? Those are going to be probably reversion to the mean trades for a little bit here this morning. Um, if you can't just flush down to test those other levels. And again, if the VIX isn't cooperating, you're not going to stay below, uh, if the VIX isn't getting below, let's just say 1820, you're not going to really get up above 25,790. And if you're not uh, trading above uh, 1910 to 1915, let's call it, you're not really going to be able to sustain below 25,500. I hope this helps. We'll see what Jack's looking at next, and I'll talk to you tomorrow.